SanDisk, SNDK, is currently doing something that should make every investor both excited and deeply terrified. As of today, January 30th, 2026, the stock has hit $640. That is a 130% gain in just 1 month. We just saw Q2 earnings that didn't just beat, they demolished expectations. EPS came in at $6.20 against a $3.49 estimate. But the real nuke was the guidance, $12 to $14 per share for next quarter. The market is reacting like this is a once-in-a-lifetime structural reset. But looking at the data, we are seeing the classic anatomy of a blow-off top. Today, we're breaking down the short interest and the gamma squeeze, and why buying right now might be the biggest mistake of your year. Why did we jump from $540 to $640 in a single session? It's not just the earnings. It's forced liquidation. Coming into this week, short interest was near 10%. That's billions of dollars bet against SanDisk. Traders who shorted at $350 and $450 are now underwater by nearly 80%. At $640, brokers are issuing automatic margin calls. Short sellers are being forced to buy back shares at any price just to close their positions. This creates a feedback loop. The higher it goes, the more shorts have to buy, which pushes it even higher. This isn't fundamental buying anymore, it's a mechanical squeeze. The bull case is that AI demand for data center storage is infinite. SanDisk is doubling prices on enterprise SSDs because they are the only ones with supply. But here's the reality check. The stock is now $300 plus above the average analyst price target. When a stock detaches from analyst models by this much, the mean reversion is usually brutal. Look at the chart. We have a massive gap between $530 and $640. Historically, 90% of these exhaustion gaps eventually get filled. If the hype dies down for even 1 day, there is no support until the $500 level. That's a 20% drop that could happen in hours. How do we know if this is the top? Watch for these 3 things. The volume spike. The big banks are selling their shares to retail traders who are buying the FOMO. The RSI, the relative strength index, is likely over 85. That is nuclear overbought territory. Sentiment. When SanDisk is the #1 trending topic on every social media platform, the dumb money has arrived. Usually that's the signal that the smart money is leaving. I'm not saying SanDisk isn't a great company, it's a powerhouse. But price matters. At $640, you are buying the peak of a short squeeze and the peak of a euphoria cycle. If you're already in, use trailing stops. Protect your capital. If you're not in, do not let FOMO drive your ship. A blow-off top feels like a rocket ship until the engines cut out, and the fall is always faster than the rise. Wait for the pullback, watch the $500 support, and stay disciplined. Don't buy the euphoria. Subscribe for more deep dives into this 2026 AI supercycle. I'll see you in the next one.